Hello everybody, and welcome to a new week. Um, I think I've set up the sound correctly, so we should be fine as far as sound quality. I did prepare the video a little bit ahead of time as far as some levels because we try to keep it short. I don't know if 30 minutes videos are as productive as 5 or 7 minutes video. So the line that you've seen here, this is a weekly chart of the euro dollar, and I've used Fibonacci's on different levels to determine where would be the most likely level of resistance and support. Um, right now, mainly resistance because the market is in a downtrend still now. The red line that you see on the chart, those are monthly level of support and resistance. Those big red line represent a strong level of resistance where if the price goes back there, eventually it will, we can expect some strong level of resistance. The green line are a weekly area of level of support and resistance, which in here, those two lines here would be a resistance level, and this square here is actually a zone of resistance. You can see it's actually close to the one monthly, and also from a daily Fibonacci, it stands to a possible level of retracement above the 100% line. So anyway, going into the daily, I've basically done the same thing with the daily, and this is where you see those um, thick blue line as well as the rectangle. Those were defined as level of resistance because the price right now is under it. This Fibonacci here are two Fibonacci's. The first one here is actually from too high above, and the last one here in green is actually from the previous high, which will tell us the move here, where it most likely would retrace if it is actually a retracement, which looks like it actually. Because on the chart pattern, we can see that still the price is into a correction move. Actually, using the Fibonacci's, those level coincide a lot with Trend Dragon tools. Like this level here is the Trend Dragon trend line, and right now this is pretty much where the price would go. Those three lines here are potentially a strong level of resistance, and they are close to the Trend Dragon resistance lines, which is right here. So the price went down from that high here to here, and has been retracing. It did break the 38.2% retracement, but it's pretty much hanging into that zone. It has not reached the 61%, but actually broke the 50% line, and is now between that 50 to 38.2% level of retracement, which we talked about it um, previously when we were studying the hourly chart. So what kind of conclusion could we say right now? Obviously, going into a long position at this level could be a bit difficult, considering that there are a lot of level of resistance above that price. To make sure is this level here, I think that we would not be considering on the daily chart, we will not be considering any long position until the level goes back to 1.1690 area and breaks it, because it would actually potentially go back up here, do a little bit of ranging here and break it, which would potentially create a inverted head and shoulder. Talking about inverted head and shoulder, potentially we have one here, though it's not very straight. And to make it a bit clearer, what I'll do is I'll just take the Fibonacci's level out. I just wanted to show it to you. We'll clean up the chart a little bit. So the only thing that the daily, well, the thing that the daily chart is telling us is that potentially there is a not very straight reversed head and shoulder pattern. Those are the shoulders, those are the head. Actually, there is a downtrend channel right here, which coincide with the neckline. Also, it coincides with a level of resistance from Trend Dragon. So the play on this one would be to wait for the break on the upside of this line here, and the objective would be, we would have an objective of about 300 pip on this one, which would not be so bad. In this case scenario, though, considering that we still have many level of resistance on the upside, it might be better to wait for the break of the neckline and wait for confirmation. Confirmation would be if the market breaks up, probably go to that level here, comes back down to retest the entry level or the neckline, which at that time would probably be here, and then goes back up again to reach the level. So maybe better to look at that before you play it. If you want to enter at that level, obviously the stop loss would be right here. So, but it would be a bit riskier. Of course, the best case scenario is that the market follow that that range to the trend line here and confirm the continuation pattern by breaking down and continue the move down, which in this case the level that we would have to look at would probably be this level here. So we'll see in the lower time frame where does that what does that give us, and I'm going to draw a line to give us a little bit of an idea what we will be looking at the on the daily chart, and I'll do it as a dotted line. Okay, so let's look at the lower time frame. Okay, if we look at the 1 hour, you can see that the 1 hour is pretty much ranging, volatile, just about everywhere. So a bit difficult to come up with an idea, though we can see here with the line that we've drawn here, the blue one here and the dotted line here, that pretty much the market is ranging within those lines. The downtrend channel is a bit offset here, but that's not unusual. So we're going to look at the 4 hour and see what we can see. The first thing for a 4 hour is basically we can see a configuration pattern that has been created, and basically it's a bit of a triangle. So I'm going to draw it. So if you can see, the market went down here on the previous move down and is now consolidating into a triangle pattern on the 4 hour chart. And basically before that previous move down, it did that also. Before that, went down, consolidated into a triangle pattern before breaking back down, following the Trend Dragon trend line, as well as this downtrend channel that we've drawn. Of course, here it seems that it has been broken. It was drawn on a higher time frame, so we could probably refine it here. But we're pretty much at the level where the market would normally, if it confirmed that configuration pattern, the market would normally start to go down. Or if it did break it down, it would be a signal that the market is ready to resume its previous downtrend. So it's when we look at it, it's pretty much easy to look at the level of entry or the safest level of entry, and those are pretty much the line that we've drawn earlier, which would be basically right here on the downside and over here for the upside. So we already have those two lines. The market has been ranging within those lines anyway, contracting since well, since the end of January, since about the 27th. So we have the configuration for that, and now you can look at a plan. So when would that happen? I mean, it's hard to tell. It should happen very soon, hopefully this week. If you traded last week, you probably came to the conclusion that it was quite hard because we had a very tight range, and it was quite volatile. So the best thing is to be patient and look at those two levels and go from there. So if you want to place a trade on the hourly chart or the daily chart, of course, this would be different risk level. If you place a trade on the hourly daily chart, your stop loss would be higher as compared to the 4-hour chart. So let's look at that. So possible entry would be 1258 or under 1258. The downside is quite nice because you would have potentially 100 and initially 167 pip to the downside before it may it will hit a level of support, which is the weekly support line, and then it should go down to after that, if it breaks it, should go down for a total about almost 400 pip on the downside. For the upside would be the break of 1388 and potentially the level after that is about 140 pip, which would be in line to the configuration that we talked earlier of the head and shoulder on the daily, even though it's a crooked one. But that would be the objective. So obviously, if you are a trader in an institution, you look at that, you would want to play the downside as compared to play the upside, because of course the upside would be a lot rockier right now. So that's pretty much what you would be looking out for this week. So I'm going to write it down so you can see it. So I send you the trade setup to your email. If I don't have your email, just send me a note on YouTube, and I'll add your email on our mailing list. Of course, this is for educational purpose only, so just watch, just to see if our trade ideas worked out or not. That's it for the euro dollar, and I'll send you the Japanese yen and the British pound after this one.